mean, you have to differentiate between shitty VCs and good VCs in the same way you have to differentiate between shitty trench warriors and good trench warriors. I think if I was building something that I wanted to compound over the long term, I would want to.
Hey.
Oh my God.
It's that kind of week, man. There's a new president.
Bro, it was the smile on your face. Like the fact that you were like, I'm gonna go do this, and couldn't contain the joy that brought you specifically at that moment. That really did it for me. All right, we're back. Episode 64 of Internet Explorers, where we try to figure out what the fuck is going on the consumer side of crypto every single week. Little baby week this week. Little baby.
Not much happened.
Little baby week. Not much happened here. We got Nicholas standing in for Josh because Josh he was so optimistic that he was going to avoid the sickness ripping through his household.
Yeah.
And we all knew that wasn't likely, but we couldn't bring ourselves to saying that to him. So happy you could step in, Nicholas. This is the entire show is very Josh coded, though.
It's extremely Josh coded.
I feel like we might have to circle back to this a little bit. And we got Peace Note on the keys. How you doing, Peace?
Doing good. Good morning. Good morning.
Hey, Peace.
I feel like you had a good tweet this morning, Peace, asking for some specific feedback on your Michelin stars.
How many Michelin stars am I worth? I would love to know.
Well, nobody's replied yet.
I know.
Yeah. What does I think?
So not any.
7. I don't know what the scale is. There we go. We got a reply here. All right, episode 64. We are going to wait. Has Trump been around since we've been on a show? Is this 2 weeks or 1 week away? It was only a week. Okay,
only a week, right? Yeah, this week.
We're talking social tokens, meme coins, dynastic tokens, family coins, the nicheification of Pump.Fun happening in front of our eyes. So talk about that. We got Vine and Portnoy and Elon tokens and a whole bunch we could probably pull from all those conversations. Our friends over at Yapster are having a moment right now, so we're going to dive into that. It's exciting to see. And I think we're going to finish up talking a little bit about how all of this, the sort of democratization of asset creation on marketplaces, impacts investing and the markets. So this is a lot of fucking topics.
Absolutely stacked list of topics, although very a lot of connective tissue between them.
I think they're all the same. So
yeah. It's all the same topic.
Yeah. Let's start off with Yapster, because I'm sure they have a new game that's kicking off right now. Either of you had a chance to go play around with it? Do you guys get invite codes?
I got an invite code, but invites were closed since I've been trying to get in. Are you in there, Peace?
Yeah, I'm in there. Got the first token, sold the bottom.
Nice.
Yeah, it's cool.
As one does.
Yeah.
So should I summarize what it is for people who don't know?
Please, yeah.
Yeah, so Yapster is this new mobile app from Salvino. Basically, users can submit their favorite meme or ticker and pay a buy-in price in Sol. Then there's a live game where every player has 1,000 credits per round to bet on those memes. Some rise to the top. There's some FOMO mechanic around voting quickly. And then you get to vote in the sort of end game. You get to vote on whether or not the token ends up getting launched. And if it does pass the test, then 80% of the tokens are distributed to the players and the creators.
Yeah, so it's an app that basically creates a new social context for a game that ultimately launches tokens and has a growing number of people who are sort of incentivized at least to participate in the launch. I played a couple of the very early versions of this as they were kicking it off, and it's been fun to see them sort of iterate around and try to find that simple mechanic. And it seems to be working. I think what people are actually really connecting to here is just the thoughtfulness around the design and the user experience. They have spent, this was months and months ago that I played the sort of early dev version of it.
Oh, really?
And they've just been iterating in a small group, iterating. And so I think people are holding this up as an example of mobile crypto and mobile being, consumer crypto being mobile. And I think, they put in the work to go win that. Big open question in my mind is just it's almost like we have tokens that try to go play the meta attention game and are all about, their distribution on the blockchains and the social context and the layer zeros of crypto. that's our one game to go play. And this other one is like, how do we go package up and limit down and focus into a very specific game that results in a token that we can ultimately compete in? And it feels like, I think even today, Clout is the other sort of big Clout V3, Friendtech V2, V4, sort of SocialFi dynamic, which is another sort of example of this in my mind, of people, again, trying to create the social context specific rules where these tokens kind of emerge and people can kill a whole bunch of money. And both Yapster and Clout, are being marketed today with all their investors and founders talking about how so many people in their world have made life-changing money coming through their tokens, and that being like probably the best marketing around. Here we go. 20.25 solo into $400,000 into $700,000.
So I fumbled that one.
But I think it's just interesting to see which, like, how each of these things work ultimately, and where's the longevity in them, and does that matter? I think right now it seems to be a pretty safe bet to take that we're taking, that the Pump.Fun and style of memecoin is just going to be one example of these sort of attention and entertainment tokens, and that being a platform where anybody can go launch anything is a pretty great business model, and then also building a specific experience that is compelling and that people want to be a part of it, I think is also a really good business model. Both have questions of longevity that are maybe outside their own control at some level, but exciting to see the experiments being run.
It is interesting. I mean, it's like this, basically the app is like a Be Real. It's like Be Real if it was a meme potluck with Chopped style voting. So,
okay, unpack that last piece. Chopped style voting is the one thing.
You never seen Chopped? Yeah, because it's like you go 3 rounds. It's like 3 chefs, 3 rounds, and they get eliminated along the way until there can be only one.
Okay, so Chopped is a show that I have zero cultural.
Oh my god, you have got to see Chopped, man. It's great.
Okay.
There's a lot to learn there. Yeah,
great. I mean, this is 80% of why you're on the show piece, is showing me what I don't know,
teaching us culture.
Yeah,
definitely. I mean, I think
we lost your audio.
We lost your audio, Nicholas.
All right, I'm back. We're going to see this theme over and over again in a bunch of the topics we addressed today. But creating special contexts where a new token can be issued with some concentrated liquidity. I'm constantly reminded of Rug Fund V1 when I see these things, and I'm sure there's even examples that predate that. So it's interesting to see it now in an app form. I guess Peace, is Yapster? It's on the App Store properly, right?
Yeah, it's a proper app. Yeah,
proper app era is.
They're on my lock.
Yeah, it's interesting they got it through.
They're on my dynamic island. I can't get rid of these guys. They've got me. They've got me hooked.
No, they did a great job.
It's awesome.
I saw Salvino saying he doesn't believe in MVPs. So it's interesting to see that long development process. Maybe you look at this without any information and you might think that this was built quickly, but from what you're saying, it's actually been a long time in development.
Yeah, and he's been playing around with concepts like this in the Farcaster ecosystem for the longest time, and I think it's just comes from like, I want to go build an incredible consumer experience point of view, and have a great team that's sort of building towards it. So get in there if you can. I think it's been, even if you have invites, it's been hard to get in, and even if you're in, it's been hard to join games, which I think is just a wonderful challenge for these guys to have. So. Saw that they're hiring. If you're an iOS dev, you want to get out there and get into something fun.
On the subject of MVPs, I mean, John Palmer wrote this essay ages ago about emphasizing the viable on that, and I just feel like in today's era, that is actually just like what is actually the minimum viable has shifted by an order of magnitude in the last 1 year, let alone 5 years for crypto.
I think lean startup, especially when it's being applied to consumer products, has been debunked a while ago, and I think that is the result of the bar just being a lot higher. And I think your favorite app is often brought up in that context piece, Figma.
God damn, yeah. What do they say? Hard to know.
Well, it was 3-4 years of building product before they even brought it out to to be released, and it needed to wait for the tech to be a little bit better and for them to figure out some stuff, and then it was an overnight success. All right, well, I think I like the world where we get to go and actually use more apps on the show. So
let's go look at this old app.
Yeah,
look at this. Look at this old thing.
What is happening here?
So Vine co-founder Russ meme coined Vine, I believe on Pump.Fun, right? It was a Pump token. As Punk 9059 mentioned, I guess piece is showing the GIF verification that people were suspicious about, which contributed to the lore, and then ultimately the video, which again we are assuming is real, but I guess it is. It's from a Twitter account at least. Punk 9059, the statistician, pointed out that Vine was acquired for $30 million, and at the time of the tweet, the market cap for this token was 10x that. So I think sort of what we're observing here is kind of the difference. Josh actually had a tweet out about this that was really great, that tokens are just so much better at capturing cultural value. And, I think we all felt that even at the time when Vine was acquired, that like, what, they're rugging Vine? Like what? And now we have these new mechanisms and seemingly increasing regulatory clarity around the legitimacy of doing such things, issuing such tokens. So interesting to see that maybe meme coins are a way to capture some of that value that hasn't been captured by equity. Certainly, given that Vine, for example, was acquired by Twitter pre-launch even, or whatever the story was with that. So even though it was a cultural phenom, regular people didn't have access to it. The stakes have changed, tables have changed, tables have turned. Things are very different nowadays.
Yeah, I mean, it's interesting because I think a lot of the debate in crypto is sort of, why are tokens valuable? And there's like the easy way to go, or sort of logic your way through it, is that tokens are equity in networks. And I think that's part of the story, and maybe one that is still in the process of being proven. Really, what we've seen tokens capture is the social capital value, or the brand value, or the goodwill value of ideas, of a much wider set of things: people, ideas, missions, visions, etc. And I think that is a big deal. And figuring out, like right now, I'm not sure that there's that level of nuance appreciated here, but like, is the world that we're walking towards one where equity companies, and equity ownership, and that represents sort of like the hard assets of the business, the thing that's operating, and then the token represents the brand value, excitement, memetic value, etc. of these things? And in some types of businesses, it might be 99% that and 1% equity value, and others it might be shifted to the other side of the spectrum. But it feels like clearly social capital is now something that we can, we look back to early social token days, and that's been our core thesis from day one, is that tokens capture this memetic or social capture or social capital value. The big question is how do you go do it over the long run, rather than it just being sort of this pump and dump cycles. And but I think there's something big here, right? And I think there is a world where, I mean, we see this already, where teams are launching on Pump.Fun, they're raising from Pump.Fun, they're valuing the attention and energy they can get from having a token and ownership from a community from day one. And I think that continues. And, I think where meme coins were once seen as just like a pure pump and dump attention game, others are looking at them as like long-term financial or asset alignment, or alignment within a community around a specific asset. And I think it's driven by the fact that if you don't have attention, you are probably irrelevant, and that trade-off seems to make a lot of sense. But I also feel like we have barely scratched the surface in the type of tools or infrastructure or new context that these things can be introduced to or into. And that's why I think Vine is a big deal. Like, I think all of these things that kind of break through represent a huge gift or an opportunity to figure out what your second act is. And I have no idea what their second act is. And for this to be something, there needs to be a second act. But as a starting point, it's the same thing I would say about Trump. I think it's like a example of a really great starting point of, here's how you can go do something. Now, what do you want to go do with it? And that's really where I think history will judge these teams on, is like, what do they actually go do with the attention and capital they've been able to bring together? And most probably will do sweet fuck all with it, and we'll go into a bear market again. But some out of this will sort of represent lasting change and be pretty big. So I just want Trump to go do something fucking cool with his 80% bag, and I just don't have a whole lot of faith they're going to go do it. But it would be such a win if they did. And the same thing with Vine. Like, if they came out and launched a new, like a Vine, even just like a retro Vine version. Like there's just so much that could be done there. I'm just
Yeah, absolutely. I saw you pitching this as like he's going to go. Have you seen anything suggesting that he's actually going to go launch an app off this, or
no, and I'm not
just
even
an
sure.
intuition,
Like,
maybe?
no, I think I'm just sort of. I have a big question around what do you want to? So it was 300 million. It's 150 million right now. That is a whole lot of responsibility and opportunity. And what do you want to go do with it? And I think the lazy approach here is like, okay, we'll just extract value from this. But what's the 10x? I mean, what is the thing that actually represents this visual he's got on the screen here, which is like a retracement and then a zip to a billion? I don't know. I think that's actually like the big question. But I think like in all of this sort of stuff, it feels like I was tweeting today, meme plus is what I'm interested in, right? It's like memes are the beginning of an opportunity to go build a really big, enduring brand, business, etc. If you're able to break through. But that the vast majority, if that's all they are, is just purely attention, are just going to fade into irrelevance. And we'll have a couple that win, and that'll keep other people excited and going forward. But there needs to be a little bit more there.
Yeah, I think everybody's been sort of celebrating the end of the Gensler era, but it's interesting, and the way that Gensler created the conditions to foster the development and the popularization of things like meme coins, which have no connection to the fundamentals of a business because that was disallowed. But I think it's interesting because it actually maybe created the conditions to invent this other category, this meme coin category, which can now live alongside more fundamentals tied. If I think of Apple or anything that has a great brand, you can easily imagine Mr. Beast, whatever. You can think of all kinds of brands where if they had a meme coin, that could easily be a volatile brand-related asset, independent from the equity in the project, related to its revenues, etc. So I think we maybe have gotten a little surprise gift from Gensler, which is that the creation of meme coins as a separate asset class from equity. Maybe we now just live in this new world where there's both, and maybe there is some interconnection between them. You could imagine a Vine app where this Vine coin has some
I think that
role to play.
The stance is come out with there's a legal-ish path to doing tokens, meme coins. Trump blew that wide open with like I'll do a low float high FDV meme coin, baby. Like, let's go. Which is a meaningful evolution from where Pump.Fun is, where the smart contracts and the bonding curves, etc. And yeah, I think like their whole argument is we're selling, it's like we sold NFTs, we're selling these digital coins that anybody can go buy and they'll probably go pay taxes on it, etc. So being able to go launch one of those things and feel comfortable about it, big deal. The tie-in between whatever the equity organization or the builder is with that token can be super simple. Really, all they have to do is show momentum and that when they go build things that are valuable to this token. And so, whether that's you're buying and burning, whether that's there's other endeavors that are bringing a whole bunch of new attention to the thing. Like, so yeah, I think that structure and dynamic is actually pretty clear right now, and I do think it opens up this other category for what is an Apple that has like an Apple ticker token and an equity token. It seems kind of messy at some level, but I mean, I think if you're not dissecting how Trump launched his token and what they might go do with it, you're probably going to be caught on your back foot here. And I mean, I think leading into Portnoy's talking about, like, I think an example of sort of the big shift here is the cultural shift that's come with it, where people who have a lot of clout are out there going, whoa, should I also try to go launch a multi-billion-dollar meme coin? Makes a ton of sense. But I think this tweet, which is just a video from Day Trader Global's Dave Portnoy, founder of Barstool Sports, just reasoning through what he really wants from the token, but also what he doesn't want to have happen, I think is just like a really great level set for how somebody who's like crypto adjacent, very good at making money, might explore one of these sort of things. And he goes through it. He's like, I want to make a ton of money. There's not really any value to this. I'm probably just going to dump it on my followers, but I don't want to dump it on my followers. So I don't know. I'm kind of sitting here in an indifferent land. And I think that's actually the smartest sort of general take to have here, which is like, okay, there's clearly something here, but warning bells, red flags. This might be extractive to the people who actually support me being here. And it kind of gets at the crux of social tokens and meme coins at a certain level, which is like, you're going to have a ton of expectations here, and the fundamental market structure, if you don't have a long-term plan for this thing, is purely extractive.
Well,
So
he does get in the video to what might be his vision statement, which is that he would be a great sports team owner. And you can imagine him presenting a token as an effort to buy his own sports team and the token holders be nominally, in some sense, owners of the team, at least spiritually. And that seems much more promising for him than just releasing a personality coin.
well, I think the personality coins and even, we're talking about cloud earlier, like the tying of a token to one's human individualness is like just like it's no fun for anybody, frankly. Like even if he made a bunch of it's like literally probably only fun for Trump because he's just like, I don't fucking care, like whatever. Anybody else that has been through the personal tokens or social tokens in the past, like people buy them, people make money. Yes, great. A lot of people lose money, and then that is on you in some level. And especially, I mean, the way that Trump did it, there's a ton of upside for him. So whatever. Pump.Fun tokens that are launched that way, that you didn't snipe early on. Like you just basically you're gonna have very little financial upside in these things and have a ton of expectations for it. So I think the idea of doing it for like a mission or an adventure or some other thing is the way that you sort of sidestep that. And I think that'd be super smart if you went and did it. I also think that there's this huge, we know that this launchpad mechanic works really well. I think that is ultimately a huge opportunity for any other subcategory. So if Portnoy wanted to come out and focus on sports meme coins, or I think my suggestion for Donald Trump was instead of just launching a bunch of extractive other tokens, that they should have just launched all of his other family coins on his own Pump.Fun type of competitor, where they use Trump as the base asset there for the pair, and that would have probably pumped the market rather than dumped it. So I feel like we're in this era where we're just doing things that we've tried in the past. I'm thinking it might be a little bit different now because the tech has improved, but that there's still some of the basic human nature that's going to get in the way of some of those things.
Yeah, definitely two categories. Tokens that are trying to be something long term, and tokens that are just games for speculators to play in the short term. And maybe there's nothing wrong with that.
You just want to know what game you're playing.
Yeah, basically. I think it will be interesting to see YouTube influencers, comedians. I saw a post today about politicians issuing their own tokens. I think it will be interesting to see as this reaches other categories, especially other kind of internet native creators who maybe haven't yet gotten into crypto. And even issue. I was watching some comedy thing. It's a comedy tweet from one of those guys who pretended to be fired from Twitter when Elon bought Twitter. And like this guy could issue a token around this joke. And actually, the speculative side of the market would be very happy to have a new stream of content meme coins. So I think both sides will happen more and more.
Yeah, I love this tweet from Elon. I'm gonna just go.
Yeah, sorry.
Go back to it here. So I guess somebody launched a token for Elon's the founder of one of the founders of Pump.Fun. Somebody launched a token, $ Elon, and Elon CTO'd it. So there's a reply. Hey, Elon, genuinely curious why you CTO'd your own coin. And Elon's response is, in a world with permissionless asset creation, most people will have their own coins. That being said, it's probably best to agree on one for yourself relatively early so people don't get farmed on the ones that engage PvP. So it reminds me back to the early social media days where people are like, well, why would I want to be on Twitter? Or why would I want to be on YouTube? One of the good reasons was just so you're there first so other people can't steal your identity. Feels like the stakes are higher in this case in some ways.
If you think about Portnoy issuing a token, I think he's going to want to think pretty hard about how to frame it, what the mission is, and then how to market it. Partners for co-branding. Is he going to want to do podcast circuit? Like, I don't know if Portnoy YOLOing Pump.Fun is really the right plan for him. For most people.
I love the way this is framed because it's like Bitcoin is so useful politically because there's no central party. In this case, this is a hilarious reframing of a CTO where this is not a community takeover. This is a personality takeover where Elon's actually saying, no, I'm adopting this for real as my coin. Like it's a community issued coin that he is endorsing, which is actually a very different thing than being a person and launching your own coin. And yeah, I don't know. It's interesting. In the
feel better.
It's interesting. I think that it gives your community more of a chance to engage in something more natural than a new point of sale for a celebrity.
Yeah. Yeah, it feels like very different intents, that's for sure. And it feels like Elon's version of, like, I guess, do we think we'll have these tokens that that represent our person, ourselves in other specific apps, or would we just feel more comfortable with those living on Ethereum or Solana and having a bunch of people own the token in that context? And it feels like one feels like more open internet, and I'm going to go have my blog space or my URL, my domain name, and the other feels like I'm going to go play on Instagram for a little while, but probably won't be there forever.
I suspect a lot of these people are, if new opportunities presented themselves, they would engage those new opportunities. I think,
I mean, yeah.
I wouldn't bet my life savings on someone's Twitter commitment to a single token representing them in 2024.
Well, when you put it that way, I think it's fascinating. I mean, should I launch a token for myself?
Should I bet my life savings on Elon's token?
All right. I mean, continuing down this path of like there being many more tokens and our inability to fully contextualize them in the present, but probably be able to look at them in the future. And how do we look into the future as these things sort of start to propagate? Dev.Fun, I guess, is a team that you and Josh spoke to this week, or at least got a little bit of color on. Maybe Josh just
I got some color. I think Josh talked to them. Maybe Dev.Fun, very cool project. So basically, you can prompt software development like Bolt or Replit Agent or a variety of other tools out there. V0, maybe halfway. It has integrated hosting. So basically, you get like 20 opportunities to prompt and revise your application through this AI software development interface. And then it attaches a Pump.Fun token to it and hosts the application that you've built. So it's kind of like Replit Agent or Bolt with a memecoin attached. What's interesting is if you look at the apps, I think what we're really seeing is just the attempt to come up with new launch pads that are sufficiently differentiated. But really what we're seeing is like, what is the minimum viable memetic differentiation for the tokens themselves? And so if you look at what the top tokens are, they're all kind of like landing pages, or they're not soft. To call them software is maybe a bit of a stretch, or at least I didn't see for the handful that I clicked through so much software, but rather, narratives presented in this itself a narrative. I mean, the Dev.Fun site actually does work, but maybe what people are looking for on Dev.Fun so far is not, they're not looking for new apps. They're looking for new websites that are, meme coins with websites attached, basically, I would say.
Yeah, I think like the attempt to draw new social context or to find a niche that a pump-like product could step into is like the land grab that I think is going on right now. And I think this is intriguing to me because at the very least it's sort of like, I think it's tech limited right now. Like what you can actually prompt to create is actually fairly limited, but I think it's probably a good bet to assume that that's going to change significantly in the coming weeks, months, years. And so, if we will have like the true ephemeral apps that are being, prompted into existence, which some folks view of the future with AI, I could see this being an interesting thing, right? Like, and it probably only takes one. Like if you can be the prime example of a simple app that is actually compelling, you do all the creative genius that actually pulls us together in this social context, I could see it working, and others participating. I've seen this applied to games in different ways as well. Now that we're seeing the game up here, so that creating a social context that is like first-person style video games that have certain limitations, and people launching using crowdfunding or a pump mechanic. So I don't know, watching the space quite closely, because I think we're going to really start to understand like what is the actual thing that people care about when they're speculating on these games early on. And I think right now the market's believing it's just pure attention. I think other folks have different ideas there. So, or even, how they contextualize that attention. So
congrats, Peace. Nice win.
Did you win? Nicely done.
I like that it's like really a game. It's like
not really
a game at a restaurant for children.
Peace has his crayons on his table right now, so don't worry.
Working backwards. I think taking this one step further, and obviously it's an amazing product, like the fact that they've integrated the prompt-based building and the hosting and the meme coin issuance onto a single product relatively quickly after Pump.Fun is pretty impressive. It would be interesting to see something like this in the context of maybe like the new restrictions on Telegram mini apps, but you can imagine something like this inside of a Telegram mini app. It's issuing new mini games that are themselves Telegram mini apps, and they're all integrated in TON network. Start to get some virtuous connection between the issuance and the playing of the games, distribution of the games. Whereas like, who's discovering these games really? Not only people who are on Dev.Fun.
Well, and ultimately, this is the game, the meta game of launchpads is: are you owning? Have you aggregated demand, right? And if you're going up against Pump right now, the only thing folks care about, I mean, aside for the edges, is like, is there attention here? Are people? Are great tokens launching here, right? And that's the challenge with marketplaces. Ultimately, is like once you have them, they become incredibly valuable. But how do you go bootstrap them? Takes a lot of time, effort, and being lucky and right. So, but I think
it'll be interesting to see if the change in sort of free speech on Facebook platforms alters how much crypto projects can get distribution on Facebook. I think we've all kind of CT is the epicenter, but also sharing links is not allowed, so everyone's always constantly working around this limitation. I'd be curious to see if I don't know, Facebook.com. Who knows? Maybe even Instagram.
Somebody can buy my Boomer tokens over there because they get discovered on Boomerville. I love it. All right. Well, is there a breakout Dev.Fun yet, or are we still pre-breakout?
I'm not aware of it, but Josh mentioned that the founders have this very cool perspective. I mean, it's a software as content play and software as meme coin even play, and they're aspiring to achieve like 20,000 softwares created every day to match what Pump.Fun is doing, sort of seeing it as a vision of one to the other. So maybe even if we zoom out a little bit on the dev aspect of this, it's like just how can you create something that does draw that attention in the absence of having existing celebrity, et cetera. Because obviously if you have a celebrity, you can drop your own token. You don't need to pay the fees for these platforms.
Yeah. All right. All of this change, all of this change, baby. I love it, man. I absolutely love it. What's this? Accelerando. Oh my god, yeah. I gotta actually I should probably just continue to fall asleep with that playing in my ear so I can get my limbic system aligned with the future here a little bit more. New founder archetype. So I love Sam Lesson's post. It's for one of the GPs over at Slow Ventures. I think well known for poking at and trying to say the things that aren't being said in the venture circles and world, and also in trying to push new categories. They're fairly well known for being interested in franchises and for backing creators. And he did this post here. We're updating the founder archetype for 2025, which is, I think, a really important, like, which founders should we back if you're a seed or pre-seed fund is like the core question, and sort of having some mental models around who's likely to win. And he's basically making the argument here that, what should I read here? That the sort of, I guess, the talent stack has changed drastically. Where there's this world where backing very, very smart technical founders over the last while was the way to win. And today, what ultimately moves the needle, Sam argues that it's expertise, actually knowing a vertical or strategy much better than other people and having lived and breathed it, which I don't know that has changed, though. I think if you look at like the YC Silicon Valley Incorporated model, that direct experience wasn't key. The lean startup model says, let's just go find the problem, learn the problem better, and we'll be able to go deliver on it. Like Sam here is articulating, well, actually, you actually really need to have differentiated expertise in a category or segment. 2 is storytelling. Look at the Elons and Sams of the world. What are they really? They are storytellers, not engineers. Their ability to push a narrative brings others around, build a meme. That's the key founder skill. Very, very relevant, obviously, to our conversation here. I think if you've been building in crypto, this has definitely been relevant for much longer, but I think it's coming to other segments as well. And then 3, leadership. You still have to hire and manage great people. That doesn't go away, even if you can have smaller teams and more leverage. So I think through this Bezos, like, what doesn't change, what does change type of thing, I think, we have these big shifts. Like, one, attention is ultimately the scarce asset. The cost of copying and or creating is going down significantly, not only in the media world, but also in the tech world and now in the market and financial world. And that, I think what might get lost in this conversation that often comes up around, single person $1 billion companies or networks, etc., is that you don't go build something that's worth $1 billion without a lot of other people being involved in it in some way. And so the ability to lead and to pull resources together is a huge advantage. And we're seeing all these dynamics, I think, speed run because of the permissionless asset creation and early speculation that can kind of come from this sort of stuff. But I do think what he's teasing at here is really like a big shift that is impacting everything from how we think about building software to how we think about, backing and investing in new asset categories or in software, and all the way down to like who are likely to be the people that actually build these next new things. And I mean,
Yeah, I think.
even
Go for it.
No.
I guess storytelling is back. I mean, Steve Jobs, classic example. Not an engineer, not a programmer, a delegator. I mean, I think about this like shape rotators, weaponized like parallel matrix multiplication and regression, loss optimization, whatever, to commoditize word
Yeah,
cell.
we did. Yeah, we did.
And then it turns out that like actually programming is a word cell activity to a point. So in the end, like all that math made it easy to write in iambic pentameter, and it turns out that programming is just a variation on iambic pentameter. So all programming is potentially commoditized. I think it's a little bit of an exaggeration. There's obviously like some orchestration or truly high skilled management that does understand the details in order to not get yourself into like security problems or whatever. At least in the near term, until AI really is that next level AGI or even ASI in terms of managing sophisticated, software setups. But this puts word cells back in control. So narrative is now more important than ever. Attention, et cetera. All these topics we're always talking about. I think his mention of, I mean, it's like someone has got to set up the nuclear generator at the XAI server farm or whatever. Someone's got to design. I mean, it's maybe in parallel or in collaboration with AI to design the newest NVIDIA chips. But nevertheless, there are like some serious, big dogs involved in the process. So expertise obviously still matters. It does seem like, for example, like when he mentions expertise, to me, it reminds me of Harvey, the $1 billion legal AI software that came out that they started developing right around the time GPT-4 came out. And the capabilities of GPT-4 made them feel that they were going to be able to build something like Harvey, which assists lawyers in diligencing whatever all the text files that they receive. So I think there it's like, some domain expertise about what the legal profession required, and then applying these tools to them was relevant in order to get to this $1 billion outcome in a short period of time.
I think it also speaks to, when you have an increased volatility in a segment or emergence, or you're playing in this attention game, that knowing what is missing or understanding where the gaps are or understanding how to be relevant becomes like the bar gets raised, I think. And so I think it's not only about setting the thing up, but it's about all the future emergent opportunities are going to require that advanced understanding to really understand where to go be impactful and what's needed. But I think how he ends this here piece, if you can just scroll down a little bit, I think falls into our next piece here. So this change in founder archetype is going to be a big industry problem. It's harder when you can't cookie cutter match kids who can code and tell them to do a few customer interviews. Also, when all of a sudden you need entrepreneurs with expertise, those tend to be people with much higher opportunity costs. The years they put in to get that expertise, the corporate ladder you're foregoing for the startup, well, you are going to have fearful folks willing to take that leap. What's old is new, because that's the way it was before the tech kiddie bubble. And I think this is the big insight that I pull from all of this, which is, and Josh says this regularly, and it's why we don't sort of believe in being indexers out there, is that talent is the scarce asset and only going to become more so. And so, when you think about, we can probably move into our next topic here. What does, if we believe that what gets funded gets built, and we're seeing, a huge shift in the technology landscape, plus in the sort of funding landscape, what does that mean for how we fund things and what the market is interested in? And so Imran from Alliance here. I'm not in the camp of debating whether this is the final cycle or not. What I can say with confidence is that some startups I've worked with strongly prefer launching on Pump over raising a traditional round. If that's the case, tokenization could begin attracting founders from outside the crypto space. With new regulatory regime in place, this could unlock hundreds of thousands of opportunities ahead. This would also likely lead to an accelerated rate of new products experiments being launched. And I mean, we're seeing this. We talked about this minutes ago. And the sort of knock-on impact of that is one that I think everybody's going to feel. So we have this increased cost or decreased cost of production creation, increased value of early speculation and customer alignment, hundreds of millions of tokens being launched, and the traditional sort of, what we've seen for the last, say, 2 years, maybe 6 months ago, the Save Plus token warrant fundraising round just feels very at odds for what these emergent opportunities are. And so I think that brings into big question, what does early seed or pre-seed investing look like in this world? Are VCs important anymore? Does this last? We're kind of in moments right now where people love tokens. We know what moments where people don't love tokens are. So I don't know. I this is the type of dynamic that I roll around in my head quite a bit, and I think a lot of people are doing that, whether you're building or you're investing, and trying to make sure you put your chips on the right sort of future-looking pieces.
Yeah, I think there's a little conflation between the inside of Sam's post and then in these as well. There may be some applications where launching on Pump is superior to raising VC, and there may be some applications where you actually need some time to research something, and you're not going to, I think there's like different kinds of archetypes of founder. And if you're building like an 8 or 9 year research project like ChatGPT, you really don't want to be a super liquid token on Pump.Fun. Whereas if you're building something that's like a, launchpad for hot AI agent waifus, maybe it's okay to be a Pump.Fun. And so it depends who you're dealing with. I don't think there's a single archetype that's going to work in the future. It does definitely feel like there's a huge vindication for people who are visioneers, thinkers, dreamers, to drive the narrative, to raise the capital, to be able to achieve something, especially if a community or like a religious tribal community can help propel that into the mainstream. But I do also think that there's going to be plenty of opportunities for people who are experts who want to do things more quietly, for example.
Well, we just go through these moments where when tokens are hot, everybody's like, tokens are going to disrupt fundraising. And then when people don't love tokens, people are like, well, why aren't VCs investing more in my and it's just like, clearly when there's hype around stuff, liquid is the way to win. When the hype is dead, private venture is probably the best, way to win. We need both. More of both is generally good. But
also,
I think,
if you scroll up to the top, but Peter Pan there, I think makes a great point from 1KX that a substantial portion of crypto VC has been about front running retail and racing to token unlocks, and it seems like that part is probably most threatened by something like Pump.Fun and deregulation around token issuance, whereas other kinds of VC are maybe not as threatened.
I mean, that is the VC business model. The big returns have been just be earlier than retail, and trusted in the Binance listing is going to get you a high FTV, and I think that is what people.
There also is, you get the support allegedly from VCs. The people who back you when retail is not interested might support you when the price is up or down. I don't know if that's true or not, but maybe.
I mean, you have to differentiate between shitty VCs and good VCs in the same way you have to differentiate between shitty trench warriors and good trench warriors. I think if I was building something that I wanted to compound over the long term, I would want a mixture of those two, but I would much prefer longer term capital. Something has a 10-year time horizon rather than 10 days, which is seems where the market is right now. So I think what goes up can come down. You want to be thinking strategically about how to form capital for your business. But I understand why people are making, the math on this doesn't work unless people care about it. And so the best way to get people to care about it in the short term is to allow them to speculate and own on it. The question is, are you trading off some long-term viability for that? And I think NFTs is very much the right way to look at all of this sort of stuff, right? The big winners have come out of that. A lot of money has been made. 99% of the teams are dead. And that's very likely what we'll have out of the same sort of cycle here. And so how do you go have your cake and eat it too? It's like, let's go play with these token dynamics, but also let's make sure we're funding ourselves for the long term.
Yeah, and I mean, of course, everyone already knows this, but a big part of the reason I was interested in crypto in the first place, which Peter is pointing to, is that everybody can access it. You don't need to be an accredited investor anymore.
Huge.
So
it's the core
opportunities. Exactly. So I think the risk increases for, it's not even just like retail getting access to traditional VC deals, but obviously retail getting access to much higher risk deals than what people are
100%.
showing A16Z. But overall, it's pretty exciting because I remember being a kid and being, reading TechCrunch every day and not having access to these deals. Dude. And nowadays you would.
This is, yeah. All right. I'm excited about what we're going to announce soon, but we'll talk about that in a future date. Okay. Sure. I'm getting word here that we have a reporter who was on the ground at last week's crypto
breaking
hall.
News.
And maybe he's filing a report here today.
Oh my God, Cheryl, welcome.
No, she's
muted. We can't hear you.
Fuck. Hi. Hello, guys. I'm here.
She shows up with her on the ground report. It's basically just no audio. I love it. All right, Cheryl. We sent you into the lion's den.
I have a report for my inaugural anthropological research quest to the Capitol with LDF. We went to the crypto ball.
Sorry. I'm on a new setup. All right, it's a little weird. Yeah.
Okay. We ended up in a bit of a 1,000-yard stare type of situation in the middle of Andrew J. Mellon Auditorium, which is the same place where NATO was signed. It felt very ironic that in the same place where history was created in that way, it's now filled with crypto's most connected players and rappers and politicians who are all just kind of pretending like they all get along. And the timing was really wild. It was just a few days before inauguration, and everyone was there trying to prove that crypto is grown up and legitimate now. We've got Michael Saylor, who we had a martini with. We had Brian Armstrong, who was looking great. We saw the Winklevoss twins. We saw my old boss, Joe Lubin. We saw a bunch of congressmen. Mike Johnson was there. Snoop Dogg, Rick Ross, Soulja Boy was there. And what was fascinating was really, I think, the complete disconnect between what was happening in the room and what was happening on crypto Twitter. While we're watching all these industry leaders like schmoozing with politicians, trying to present this image of respectability, we literally have Trump launching a shitcoin, completely flipping the narrative of like what is going on in that room. The irony was just very, very thick. They had lots of people spending like so many years and millions of dollars lobbying for clear regulation, and then our president is just coming in and opening the floodgates to basically do whatever the fuck you want. So yeah.
What was the vibe in the room? What was it like?
It was just, it really transformed throughout the evening. When we walked in, it was a very classy affair. It was very nice. It was like everyone decked out in their nice gowns. We walked in, we got our mushrooms confiscated, so that really put a damper on our evening because then we had to go.
Secret Service, right?
Yeah, but the Secret Service. Then we had to go drink alcohol, which is boomer technology. And then as more people were drinking, like the vibes got a little bit more comfortable, and then Snoop Dogg came on stage, and then it just became like, I think you could imagine the vibe, how it shifted. But I think just overall, the tension between being at the event and just wanting to talk to people and meet people that I've only ever previously met online, and then my phone just blowing up the entire evening with, is the token real? Is the token real? Did you buy the token? And it's just like, we don't know if the token is real. We opened Trump's Twitter and it looks like a scam. So obviously you don't buy it. And then we're going to miss out on 100x, 1,000x, whatever it is. And I think that's less of the point, more of just the irony, which is like the perfect crystallization of the tension between wanting to being taken seriously by these institutions and politicians, and then simultaneously not wanting to lose that disruptive edge that makes crypto interesting, which is really like these cultural and social moments. And then I also found it very interesting how well the infrastructure held up. Like Solana handled that load remarkably well. And we saw billions of dollars of liquidity ready to deploy within a few hours. So it really proves, again, the point of cultural moments really driving the adoption and not the technology necessarily. The tech doesn't need to be perfect. It's just like, is it good enough for when that moment comes?
Do you have a question? I had a follow-up question.
Do the follow-up question, because yeah.
No, I'm just curious if you noticed anything. I mean, meeting some of these like Twitter celebrities, these CT gods. Any observations on the difference between the CT personas and what they're like in real life?
Honestly, everyone we met was so nice. Very respectful, very kind. Everyone had their funny little like nods to crypto with their outfits. We had Bitcoin ties. We had Make Bitcoin Great Again hats. We had some people with MAGA things going on. And yeah, generally just everyone was very open to just brainstorming the next 4 years will look like. I had a nice conversation with Joe Lubin, and he has a lot of amazing thoughts about where the space is headed in the next 4 years and kind of what this new administration is opening, and the ability to better decentralize not only the nature of his organization, but the nature of Ethereum generally, and just the way that a lot of these tokens and ecosystems work together. So that's exciting. And I think it'll be interesting. I think like one of the most fascinating things is how much has happened in the last 7 days in this administration.
Oh, yeah.
We had this token get launched, and then in the past 7 days we were making jokes about a strategic Bitcoin reserve, and now we have a national digital asset stockpile. We have Trump declaring crypto as a national priority. We have the whole Trump family has meme coins. We have Ross is freed. We have banning of the CBDC. We have crypto executive order signed within the first 3 days. We have
And
a
Ethereum's up
pro-crypto White House.
4% in the last 24 hours.
Ethereum is up
20%.
4%. My portfolio is down more than that.
Yeah, I think that's the interesting thing to me is just
You're
how
thriving.
I feel people feel destabilized here because the narratives don't quite line up, and I think it's interesting to see, right? Like you have clearly people think it's going one way. Trump coin comes out and destabilizes folks from it, and then it's like, okay, we're going to come with landmark executive orders, and yet the market's like, yeah, we just go hold on and wait and see what people go do with this because maybe it's all priced in. I don't think it's all priced in, but
I don't think so. It's
strange. It's just like all of the liquidity is just ready to throw at the meta when it happens. So yesterday it's Vine, and then the day before it's like the national digital asset stockpile. It just seems like one coin does well at a time, and then the rest of the time it just kind of sits idly waiting.
Yeah, interesting.
Musical chairs.
Cheryl, do you think movers and shakers should be heading to DC to hang out at events like this in future? Do you think this was like a important networking opportunity, something that builders or traders in the space should get into?
Definitely. Oh, definitely. I think what was so eye-opening is how few people I knew there. I've been to so many different crypto conferences over the past 8 years, and it just is such a stark light on how much of a different part of the space we're building in, and how many different corners and pockets of crypto there are that are all actively working and trying to move the space forward, that we just don't engage with on a regular basis ever. And when we go to ETH Denver, DevCon, it's like we're talking to builders, but we're never talking to the people that are actually shaping the way that this technology is introduced to the world. So I think that our whole space should prioritize going to events like this a lot more.
Should we play some footage? We got some clips.
Oh yeah.
So LDR is learning how to use CapCut. It's part of our grand goal for 2025 is become pure anthropological research on the ground crypto enjoyment czars. And this is our first foray into that. So we're still learning how to edit, and we got the video done.
No, it's gonna be great. You can't
it's gonna come, you guys. It's gonna come, and then we're gonna keep going on quests. So if you have a quest for us, send us on a quest. We will go. We will document it.
Oh my gosh.
Yeah.
Wow. Yeah, definitely.
We finally approached the venue. The same hollowed halls that witnessed the birth of NATO and NAFTA are about to host what might be the most expensive tech meetup in history. The scene outside is pure crypto nouveau riche. Hundreds of black cars, Escalades, and Cybertrucks in the street. A man approaches us and tells us how to get the most iconic photos. What an ally. So of course we get a photo shoot outside. Then comes security, x-rays, full body pat-downs, for a heart-stopping moment where we think we're about to get arrested by the Secret Service, which would have been incredible for the lore but terrible for the quest. Within minutes of entering the ball, the group chat starts going nuclear over some Trump ticker, which we promptly ignore because there's no way that's real, right? Right? I mean, it literally says special community on the website.
That's amazing. Does it say special?
I want to send you to China or North Korea.
Yeah,
we got to get you out in the world. Yeah,
I got a connection to a Politburo member that came through the Telegram. So maybe we get you some Politburo ETH Denver discussions.
Cheryl and
I'm
LDF
so
interview Xi Jinping. Come on, that's a hit.
On the way
ready.
up.
Let's go.
On the way up. All right. Well, so I'm assuming you have some more fun goodness that you'll be dropping too. So make sure people are
Yeah.
following C Club
We
HQ
will.
or Cheryl Douglas. Share Dougie. Teach me how to share Dougie on the Twitters. I'm sure there'll be a bunch more. And thank you for going to do that so I didn't have to.
You're welcome. And well, there'll be more.
Awesome.
Thanks, guys. Good job.
All right.
Thanks, Cheryl.
Ciao.
I like this. I like this daily show kind of thing we're getting into here. This is fun with like little
Man,
capsules.
I'm kind of stuck on the cringe of like, do we have to go play political games with political elite to go make this industry a thing? I'm glad some people are doing it, but I don't know, man. The
Because that's what
sycophants,
being
it's just
mainstream, what it means.
I guess so.
We have a couple.
I don't think Facebook became what it means because it was like, hey, I'm going to go build a political tool and make political friends. They basically probably delayed that far too late. So
yeah,
in it for the tech, baby. Let's go. All right, we want to do a lightning round or?
Yeah, we have a couple topics left. Yapper Launchpad is a good one to talk about. Kaito has this new Launchpad they just recently announced this week. So each week, 3 projects will be selected for a Yapper leaderboard token launch. Kaito Yappers can vote using their Yaps and their smart followers both. They're like 2 different kinds of points you can use to vote. And then over time, they're going to be integrating the Kaito holders, which I guess is like the Kaito NFT, who will also vote. And there's a 50-50 between the Yappers and the NFT holders. Votes are locked for 7 days, and then a token gets launched that's sort of community selected. So another one of these efforts at creating concentrating liquidity around a launch.
But I haven't dug deep enough into this. What do you get if you win?
I think they launch your token is the win.
What's that mean? Because a lot of these teams are teams that are launching tokens separately and have a bunch of interest. Yeah, this is not like brand new tokens.
Yeah, I don't know. So to launch, I don't know. Peace, can you see in that thread what it means? I assumed it meant to launch a token.
Pre-TG projects.
Yeah, so they're pre-TG. So yeah, it is a token launch. So it's a launch pad.
Yeah, I don't. Man, we really should have fucking dug into this a little bit more before we go do it. Like, basically, when I was sort of looking at the leaders here, like these are all, very large projects that are going to be issuing their own tokens in a very official, big way. And so I'm curious if this is just like you get a whole bunch of attention here, or
I think it's the real token launch. Maybe Peace. This is probably a little bit rough to get into this doc, but Josh had a good tweet on this. Yeah, he basically summarized this kind of flywheel that he perceives around Kaito, where what do you say? Real business isn't great product. It's a real business with a great product and an airdrop coming soon, so people are interested. People earn yaps by tweeting about tracked pre-TGE projects and being high on their individual leaderboard. And then those tracked projects start showing up on mindshare charts. All the projects want to be tracked to start to incentivize yappers to vote for them on the new launchpad. And then ultimately, I mean, I think the last point he makes is maybe a bit optimistic, but Kaito becomes a horizontally integrated farming product for everything and attracts everyone in crypto. We'll see about that.
it's a good bull
but
post.
it does make sense to kind of track attention, who's got the ear of the smartest people on crypto Twitter by evaluating their tweets and then giving them a say in what gets highlighted. Kind of similar. I mean, unfortunately, their names are so similar too, but Yapper, Launchpad, and Yapster, there are shades of the same thing, but for a slightly different part of the market.
And I think what's most interesting here is that they're basically using Twitter as a social network where this happens, and then sort of being a layer on top of that where there's very clear incentives for projects and others to try to get a flywheel going here. So I think like the passive, you're not having to download a new app, and the incentives are just trying to slightly shift you into a specific direction. Like if you want to be higher up on the leaderboard, you're probably going to show up a little bit different to do it, which feels like a different thing than trying to build an app where you're going to go do things inside of it to sort of earn reputation, attention, etc. maybe takes us right back to the beginning of our conversation here, where there's like opportunities to build new social context for tokens to emerge from, and then there's existing social context that tokens can kind of go play in. And it feels like the latter is just a much bigger opportunity in my mind.
I mean, it's very cool to be observing what's going on Twitter. I think there's always questions about how accurately one can do that. Thinking about this and doing a little bit of research yesterday, I was thinking, it is funny that we're going back towards these models where there's like, if you look at the Kaito Yaps site, there's all these stats, but there's no open source algorithm for how they're computing these things. So at the end of the day, it is like a private evaluation of who's significant and who is impactful. And then you're putting kind of a lot of trust into their evaluation. It's in a way reminiscent of how algorithms work on traditional social media, where we don't have access to the algorithm, but that algorithm drives all of the attention. And so it's not, I don't think the fact that their algorithm is proprietary and secret is like a foreclosure on the possibility that it's very successful, but it does seem in a way like a step back from sort of those Ethereum values that brought me into the ecosystem, where we could actually know what is going on under the hood. In a way, the Yaps evaluation is just like an unverified contract on how people are actually evaluated. Maybe that's necessary to avoid people gaming it, but it does seem like, okay, we're putting a lot of stock in this one thing. Is this one thing really going to be around a year from now? I'm not sure.
I mean, that's $1 billion question here. You can probably say no to most things, but they're onto something here. I think that's going to be interesting for a while. I think where should the ideals be held, and in service of what, I think is just a constant battle for every builder here. And I think defaulting to do the thing, make it compelling, capture attention, get people money, and then figure out how to make it better longer term feels like the right stance here, but obviously not for everybody.
Maybe from a positive perspective, they are kind of doing like what Curve gauge voting did, but for Twitter influence, which, a lot of people have taken a stab at something in this neighborhood, but it does feel like a pretty thorough, from Twitter through to Launchpad experiment. And I think this Launchpad is just one of the series of things they're planning to do with these Yaps. So we'll see what other kind of products they come up with.
All right. I apparently need to be on another phone call right now. So is there one lightning round we can do so we feel like we're accomplished here?
I think there was just, the only lightning round I had was actually not even a lightning round, but just the fart strategy topic, which is micro strategies for, is it Fartcoin?
Yes. Yeah.
I don't know if there's much more to say about it than that. I think that pretty much summarizes it.
I think, this is interesting. I mean, maybe we can just push this one to next week, because I think this is still an interesting conversation, which is Andy, Truth Terminal founder, talking through how they go from this just being a meme coin into something that can be more sustainable long term, and the legal and sort of operational structure they're trying to bring in there. And that alongside the Fart Strategy token, which is a meme coin really just designed to buy more Fart token and Sailor, the Fart ecosystem. Both those things next to each other feel like a perfect, little meal to dive into if you want to. So I'm sure that'll be in Josh's newsletter later. We'll talk about it next week. All right. Well, I think we talked about 1% of the things that happened in consumer crypto this week. We will endeavor to do something similar next week, every Friday, 10 a.m. Pacific, 1 p.m. Eastern. It's also available on your favorite podcast app. So if you want to go hang out on the Apple Podcast app, on Spotify, you can subscribe there and listen to us whenever. Oh, it's on YouTube, but we have I hate seeing like 57 views on YouTube, so I don't want to tell people to go there yet.
Okay, sure.
We don't really push people there, but it's available on YouTube.
Loom. Check us out on Loom. Check us out on. We should be on LinkedIn. Why are we not on LinkedIn?
We are. We stream live to LinkedIn. Thank you, Nicholas. That took us a long time to get the 251 people following our LinkedIn account to actually get the live stream component. We, I think, still have 252 people following us on LinkedIn. Wow. So.
Middle managers at Costco are big fans
huge.
of this show.
All right. Well, we'll see what happens over the weekend. Probably a whole new world we walk into next week. So until then, I guess we'll see you on chain, and good luck.
Thanks for tuning in.
Internet Explorers.